Welcome to The Explainer. Today, we're digging into a name most of us know and trust on the road, Honda Atlas Cars, or HCAR. But here's the thing. We're going to explore why that trusted name is smack in the middle of a perfect economic storm right now.
You see their cars everywhere, right? For so many people, they're just a symbol of reliability. But today, we're going to look past the shiny showroom floor and dive into the Pakistan Stock Exchange. Why? To ask one really critical question. Is HCAR actually a smart bet for investors today?
Okay, so to even begin to answer that, we've got to get a handle on who HCAR really is and, what kind of market they're up against.
Right. So first off, this isn't just your local Honda dealership. HCAR is actually this huge joint venture that assembles some of their most iconic cars. We're talking the Civic, the City, right there in Pakistan. And they've been doing it for over 3 decades. So yeah, they've been a major player in the country's premium car scene for a long, long time. But look, having a strong history, that's not always enough, is it? To really get what's going on with HCAR, we have to zoom out and look at the, pretty choppy economic waters they're trying to sail through right now.
And this is maybe the most important thing to get. HCAR's success? It isn't just about building good cars. Nope. Their entire fate is pretty much tied directly to the health of Pakistan's wider economy. I mean, things like the value of the rupee or a sudden change in government import rules. That stuff can literally change their entire business overnight.
Now take a look at this chart, because it really paints a clear picture. You might think of Honda as this giant in the premium sedan world, and they are. But when you look at the total number of cars sold, they're actually the 3rd biggest player. They're trailing way behind Suzuki and Toyota in terms of sheer volume. So, okay, we know the market is tough, but how has the company actually been doing financially through all this? Let's take a look at their financial vital signs. Wow. Okay, this chart tells a pretty dramatic story, doesn't it? After a really solid year, their revenues just took a nosedive in fiscal year 2023. And we're not talking about a little dip here. This was a sharp drop, all because that economic volatility just hammered consumer demand.
And it didn't stop there. The situation actually got even tougher. The company didn't just make less profit, they actually posted a loss in their recent quarterly results. That's a huge red flag that their costs were just rising way faster than their sales.
So you got to ask, why? What caused all this financial pressure? Well, it was basically a perfect storm. You had the rupee getting weaker, which makes imported parts way more expensive. You had high interest rates, which makes it harder for people to get car loans. And on top of all that, you had global supply chain problems squeezing their profits from every possible direction.
And here's where it really hits investors. HCAR, which was known for paying out dividends, had to put a stop to them. So if you're someone holding that stock for a bit of income, that's a pretty big deal. A major blow, really. All right, so with all that financial strain, what does this actually mean for you if you're thinking about investing in HCAR right now?
A lot of the time, the first thing investors look at to figure out if a stock is cheap or expensive is something called the P/E ratio. It's just a quick way to see how the market is valuing a company's profits. Generally, a lower number might mean a stock is a good deal.
But, and this is a big but for HCAR, there's a catch. Remember the E&P stands for earnings? Well, their earnings are negative now. They're losing money. So that means this super basic fundamental tool, it's completely useless here. You just can't calculate a meaningful P/E ratio for a company that isn't profitable. Okay, so with that valuation tool off the table, let's get really specific. What are the big, major risks that anyone even thinking about this stock needs to be watching like a hawk?
You can really boil the main risks down to 4 key things. Number 1, that crazy exchange rate volatility. Number 2, cars just getting too expensive for regular people to afford. 3, the government suddenly changing the rules, like banning imported parts. And number 4, fierce competition, not just from the usual suspects, but from new players jumping into the market too.
Yeah, that's a really tough spot to be in. So the big question is, with all of these roadblocks, is there any way for Honda Atlas cars to actually recover? Well, a comeback isn't impossible, but boy, it depends on a few very big ifs. The whole economy has to get more stable, interest rates have to drop so people can get car loans again. And from a strategy standpoint, the company really needs to start focusing on what people want now, which is more fuel-efficient cars and, of course, hybrids. So when you step back and look at the whole picture, the investment case for HCAR is really that classic story of risk versus reward. On one hand, you've got some serious immediate risks that are all tied up in the economy. But on the other hand, you have the undeniable power of that Honda brand and the chance for a massive comeback if and when things get better.
And that leaves us with one final, crucial question to chew on. Everybody knows the Honda name, everybody trusts it, but in an economic climate this tough, is a powerful brand name really enough to get them through the rough road ahead? That, right there, is a puzzle that every investor has to try and figure out.